Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. Let's go over some of the things I do know. Again, I've been saying this for a couple weeks, but it feels like there's a conversation happening and I don't know what people are saying. That's what I feel relative to my knowledge of the market right now. Sometimes you are really in the zone and sometimes you're just not. And, I just have the data, right? That's all we have. Exchange reserves for BTC down, remain down, no big spikes, a little bit of an uptick, but nothing to really, that should move the needle. ETH continues its decline as well. We'll start with this stuff because it's easy to just say, nope, that's not it. That's not it. Minor outflows. Nope, that looks fine, right? They had some issues. I'll get to that, but no big issues there, really. ETH premium is actually a premium now. It's not even a discount anymore. GBTC, of all the things anyone's looking at, this is one of the biggest issues is GBTC going negative, because if GBTC unloads any BTC at all, they currently have 653,000. If they're unloading any of this into the market, then yeah, we're going to have an issue. And that's going to be an easy thing to look at and say, okay, yes, that makes sense. People are selling. The whale, this is basically a whale selling. Anytime a whale is selling, price will go down. That's just how it works, especially if demand isn't there. Currently not seeing that, So flows wise, not seeing any reason why we are selling off like we are. Doesn't really make too much sense to me. If we look at MA multiplier, 2-year MA multiplier, this is the 2-year MA. This is 5 times that green line. Historically, it's been buy zone, sell zone, green, red. We got close to that. We did not breach it. We did not come above it. None of that stuff. So unlike any of the previous tops, because that's the conversation ultimately, right? Is this the top? Is it all over? Are we going back to 20k BTC? I got a text this morning from somebody. Are we going to 20k now? That's what's in people's minds, right? So let's look at the data. Haven't topped yet. It looks more reminiscent of 2017 again. I'll show that in another way as well, but it looks like this stuff, right? We came close, we didn't, we dipped a little bit, came close again, dipped a little bit. That's really what you want to see. You want to see this type of move. I want to have a reason to have this type of move. I don't think we had evidence to support this type of move based on what I'm looking at. That's why it's a bit weird. 200-week moving average heat map looks fine. Again, puke green bile color, not red. How this works is the speed of the 200-week is measured on this heat map. If we go up too quickly, it goes into the red. That tells you get out. That's the top, that's the top, that's the top. So the past 3 times it's been clean, even though in 2013 we get 2 instances of this, it's still been clean. The same with MA multiplier. It's the stuff, there's a reason I look at this stuff, because historically on backtesting has been so good collectively at predicting things. If we look at the Puel multiple, down. Nowhere near historic backtesting levels. This is notional coin issuance. Basically, if the miners get too rich, they're going to end up selling. Again, whales selling pressure. That's going to bring down price. Eventually, the notional value of coins issued, this is the Doge problem. The notional value of coins issued is greater than the demand for the coin itself, the buying demand. So you have to assume all miners are selling all the time, every day. That's just an easy assumption to make. Not necessarily what they're actually doing. But in Doge's case, Doge broke 5 million in notional issuance per day. And I think in Doge's case, that was just too much to overcome. And it crumbled, right? So that's what this multiple is suggesting and showing for BTC. If we get too much money flowing on the sell side based on the block reward, then we typically top. Again, haven't got there yet. Pi cycle. Everybody's talking about this, right? I talked about this last couple weeks because it crossed on the 12th. So it gave you a perfect exit. Realistically, it gave you a perfect exit thus far. Now, I would so love for this thing to crisscross over and over and over again, just to throw people off. The pi cycle maximalists, it's a signal, it's whatever, again, but collectively it doesn't jive with everything else all the data I'm looking at, you know. So either I'm looking at the wrong data, I'm weighting the wrong things, or none of this matters, right? So again, backtesting shows this cross, this MA cross, has been correct by 3 days, basically, on every single top so far. You know, it didn't really predict the 2019 top, but it's been pretty scarily accurate on backtesting, right? I watched a video of some guy, I'll link it in the comments, or in the description. I'll put it in the comments too, why not? He did some high-level analysis of pi cycle type indicators or crosses, and basically is giving evidence that you know, we're not topped yet. Supports my bias, sure, but the math he did made sense as far as what he's looking at. He's looking at multiple crosses. I'll just link it. I'm not going to be able to explain it accurately, but definitely give that a watch if you are into that specific indicator. MVRV, market cap versus realized cap. This is how much is moving on chain versus the actual market cap. Again, way down. This is what, down since January, almost sub-January, sub-December. Very reminiscent again of 2017, where things go way up, way down. Now this is going to be influenced by block times, transactions, all the other stuff. Realized cap is how much is moved on chain. I'll get to that in a second. How much was moved on chain, but if we look at the UTXOs with less than 6 months of movement, so how this works is it's a blockchain. You can look at every coin, see when it's moved, measure that age collectively, and historically the tops have been around 50% of the chain has moved within the past 6 months. Has on backtesting supported those toppy signals. We're around 37% here. We're actually declining on the 1 to 3 month, so we're getting fewer and fewer coins moved in the past 3 months. Again, reminiscent of this 2017 sort of dip in the 1 to 3 month movement, but nowhere near 50%, right? There isn't just all of a sudden a ton of churn on chain where this is the unhodl metric is what this really is, because it shows the OGs are selling. They said, you know what, this is enough, looks high enough to me. Eventually, again, whales selling pressure gets too high, demand just isn't there at those prices, and that's it, that's the top. So not quite there yet. Uncharacteristic if this were to be a top. Is it at 37%? Is it a significant high relative to backtesting? Historically, yeah, we haven't been this high since 2014, right? Other than 2018. You know, if you just look at these bytes here, extremely high on on-chain movements relative to where we are other than the previous all-time high. So if we look at this together again, you know, I'm just not seeing it, right? There's no reason that this should be the top based on this data if the backtesting is able to predict things, right? Which it's dangerous to assume that that's the case. But with an N of 4 or 5 at this point, we don't have a ton of data. It's not exactly statistically significant, probably, but nowhere close to where the previous tops were based on everything except pi cycle. Currently, pi cycle looks like the best indicator that I've ever seen in my life. Everything else is useless. We'll see how it looks in a month, 2 months, but everything else looks fine. If we look at some of the news that's affect things, you know, 2017 felt like legitimate sky is falling, BTC network might get destroyed by by all sorts of nefarious actors. Now we have sort of external news. Biden wanting to raise the capital gains tax. I'm not going to comment on that, but good. It's not going to go anywhere near where he is suggesting. You know, people can have a temper tantrum and sell and think it's going to affect them, when in reality it's really not going to affect most of the people. Let's be honest. It's going to affect very few people, certainly a decent amount of crypto people, but that's just in the US. Anyway, that was very clearly a sell-off point for the entire market. Not necessarily a fan of this article, but this does basically highlight what happened in China with the mining stuff. There was a flooded mine. Yeah, they were using coal, you know, whatever. I'm sure you've seen tons of China mining stuff, but this is another, I wouldn't call this FUD, but it's part of the reality of what happens here when you have miners centralized in a location and there's an issue. We get floods in China mining places all the time. I mean, you just Google it. There's tons of pictures. So this isn't a big deal on balance, but collectively with everything else right now, maybe this was enough, right? Maybe this was the catalyst. If we look at difficulty, it's negative 9%, and that's the biggest negative difficulty adjustment since November 2020. I forget, I think it's PlazaDAO on Twitter. There's a guy who puts together this negative mining difficulty versus price, and historically, like the ultra negatives have been bottoms in price. So we'll see. Maybe this is the bottom. My body's ready for the bottom, right? But hash rate definitely off here, and we can see that on the mempool, which is basically the amount of transactions waiting to be confirmed, and currently high at their highest point since 2018 when the network was under attack. So the network is feeling it. It is definitely feeling it. It's like when you're on that 10-mile hike on mile 9, you're gonna feel it, right? We are there right now. This is all of the number of transactions waiting at around 140,000 to be confirmed. Fees overall not too bad. Nowhere near Ethereum's fees, let's be real here, but for Bitcoin, this is quite high. And this is total aggregate BTC fees waiting to be confirmed, and then the colors are the sats, I believe, that they were sent at. But anyway, pending transactions way up, mempool clogged at the moment. And another way to look at that is transaction counts and active addresses from Coinmetrics. In the red here is transaction counts, which look like, the network is over, right? It looks like it's done. If you didn't know about the mining stuff, you'd say, okay, this is a failed experiment, right? We go from 300,000 to less than 250,000 in basically a couple days. And this happens every once in a while with BTC because of the difficulty adjustments, but it'll fix itself in 9 days, right? In 9 days, difficulty will adjust, block times will retarget to 10 minutes, everything will be better again. But currently, transaction counts way down, so that's bearish. Active addresses also way down, which you don't want to see. We're sub 1 million now in active addresses. Now, if you compare that with Ethereum, all the more reason to think, man, this actually looks pretty good here. We're doing fine. On-chain metrics look okay. BTC got slaughtered because of mining stuff. ETH, look at this. Look at these transaction counts. I don't see anybody talking about this. Everybody's talking about fees and focused on fees. But we should be talking about transaction counts and active addresses, which are at an all-time high. Another one I like to check out is the unique addresses. So the addresses can never be destroyed, so it's important to know. But I like to look at how many addresses are being added just recently. Looks like around 130, 150, 155 a couple days ago. And this is good at sort of picking Euphoria and Doom if we look at the lowest and highest, but you can look at this yourself and pull some interesting data points from here. But for me, this is indicative of DeFi or DeFi popping off, ETH doing well. I expect this to just skyrocket based on active addresses. Active addresses, this is an insane chart, people. This is an insane chart. This was, that other stuff is real, some mixing thing, I think. But yeah, ETH transaction counts and active addresses all-time high, and nobody's talking about that. If we look at fees, I think fees are way up as well. Yeah. Even with that, this is the crazy part, right? Even with the fees being as high as they are, people don't care. They're sending stuff anyway, right? They're like, you know what? I'm going to eat it. I don't care. Maybe this is a FOMO fear thing, Euphoria, Doom. People are afraid sending stuff through DeFi, but man, that is an impressive chart. Anyway, and if we look at the DeFi perp, just some random indice on FTX, this looks fine. Technicals, we keep bouncing at support, right? So far, we even have another support down here. So DeFi looks fine, right? So what's going on here? Let's take a look at some BTC Technicals finally. We're around 15 minutes into this video, but Pitchfork, we go through the trend stuff first, right? Pitchfork, pick 3 points, you get a rate of change. Price likes to live near median line. Median line currently around 33K. Maybe 33K by July for real this time. 200-day moving average is at around 38K. Our 1 yearly pivot at 38K. Our 3 yearly pivot was around 63K, and you can see how we just failed quite miserably. If we climb this like a ladder up and down, the R2 should be a significant support. In the near term, if that fails, then we're headed to a complete mean reversion to the 200-day moving average. Tons and tons of selling volume here relative to buy volume. And especially on Coinbase, there was a jokester a real jokester, just selling market orders like cotton candy. 200 million plus, I think, is what it ended up being for BTC. Probably around 20 to 30 million on ETH. Just, you can see it on the 1 second chart, just chunking the bid side down. So they, I don't know what would cause somebody to want to do that, other than trying to blow up the market and or just a poor trader noob with a lot of money. I don't know. Honestly, what would cause anybody to do that? Because they're just eating so much in fees and they're losing a ton of money market selling like that. Anyway, so trend metrics overall look fine. I'm not bearish until we're out of this pitchfork. Let's be real. Now we can be bearish on the intra-day timeframes. One of the biggest disappointments was this pattern, which looked amazing. Didn't even come close to its target, right? This is why stop losses are important. Ideally, you're out at this low and or the break of the diag here. If you're trading this, on leverage on lower timeframes, we had a B-band breakout that failed. Bollinger called it a fake out. I mean, sure, but you can. At what point do you say that's not a fake out on every single breakout, right? Ideally, on these breakouts, you want volume. Then obviously that's the first thing, but the second thing is you want to walk the bands like this, which we did not do. Spinning topped on the day, and that was all she wrote. Cloud looks fine thus far. This is the closest we've been to the actual cloud since September, October. We had 4 key June bounces, and she just couldn't hold it, Captain. She just couldn't hold it, and it went below. That's part of the game. This is always what you want to see. You want to see a singular wick into the key June. Currently, the stop losses on any of these bids or any of these purchases at the key June are any candle close below the cloud support, and at that point, you are ideally short with an edge-to-edge move back to 38.5. Again, matches yearly pivots, matches the 200-day moving average. So it wouldn't be a big surprise. I mean, that's always, I hope I talked about it last week. I think I did. I know I talked about it Monday for BNC's videos, but there's always this decision tree branch where we could get this edge-to-edge move, right? But you don't expect it until it actually happens, because the trend is your friend until the end. We will get a bearish TK cross most likely, which is fine. Honestly, at this point, I want everything to reset. I want the MAs to crisscross. If we're talking about ultimate bear moves, again, compared to 2017, we hit the 20 MA on the weekly several times. We hit the key June on the weekly several times. Currently, that's between 43 and 34, 35. So that's obviously a large percentage still down from here. Highly unlikely we get lower than that. 35, 35 is my all-in, selling everything I own, all my earthly possessions type of bid for me. Because the problem is, if we get below the key June, if we get in this black hole of doom down here, then that gets real messy. That's what you don't want, and typically don't see too often on higher time frames. So not an expectation that we go to 35 or 43, but it's part of the decision tree. It's a branch. It's a tiny, tiny little branch. The 12-hour for people trading the singled cloud doesn't get you out any sooner. Doesn't really help you. Maybe gets you out at 53, 54. But if you're trading this on the TK cross or whatever, it doesn't help you. And another way to look at this is, if you want to get in sooner on cloud resetting, look at the 12-hour. If you're not wanting to wait for this bullish TK cross recross, right? Just look at the 12-hour and trade those signals as you would the daily, and wait for the bullish Kumo breakout above the cloud. So this looks like it's definitely going to reset on the 12-hour. Alligator fractals have definitely reset, although on the daily they've been not super hot at signals in general, because how you trade this is if we're above the fractals, or if we're above the MAs, we're bullish. If we're below, we're bearish. And any green fractal candle close above, you are adding to a long. Anything below a red fractal, you are closing your long. So it acts as a trailing stop loss. So you're stopped out here, you're stopped out here, you're stopped out here, you're stopped out here. And you're adding to a short here because we're below the MAs. The point is, this hasn't been super clean on the daily. If you're trading it, we also had these crisscrosses 3 times since February. But at this point, these have definitely crossed on the daily, so everything's reset. So I would treat this as a great signal for a long entry in the future once this crosses bullish again. Right now it's telling you to be short and hold a short and add to the short. So something to keep an eye on if you're short for sure. I like, doubling this surprisingly, right? Double Josh likes to double everything. This is the 2-day, so it's effectively the doubled alligator. And it looks so clean, right? You're long here, it's just basically the cloud. Because you're long here, it's trailing stop, trailing stop, trailing stop. We didn't close below this trailing stop, so you're not out. Trailing stop, trailing stop, trailing stop, trailing stop. It gets you out late March, and you're basically out unless you want to add a long here, but then you're stopped out basically 2 days later. And even this is crossing bearish, so much like the daily doubled cloud, bearish. So trend metrics definitely resetting. The 1050, if you want to get super simple, also crossing bearish. A pretty high hit rate back-tested cross. So MA's definitely angry here. Definitely most bearish they've been, most neutral they've been since October, which I can breathe a sigh of relief now because that tells me, yes, I can finally punch it. I can go all in when this crosses bullish again, rather than getting nervous at every single high that we're going to pull some shenanigans like this. This is the 4-hour where we are currently. Bullish divergence on RSI and MACD. Doesn't mean we're going to get an immediate reversal, but it does mean bearish momentum is waning for sure. One thing I did see people talking about was this Wyckoff. I didn't map it out completely, but look up Wyckoff accumulate or Wyckoff distribution if you are curious about this sort of thing. Basically, we don't want to break this low, otherwise it's going to get ugly. And I don't think that's like rocket science, but yeah, take a look at that. It matches decently. This didn't actually dip down low enough to match perfectly, but it looks similar. So people are going to be talking about Wyckoff, certainly. All right, let's get to ETH quickly. Ascending triangle hit its target perfectly. ETH behaved beautifully. Couldn't be happier with ETH in that regard. If I'm a chart pattern trader, this is what you want to see. Hit your target first, came back, hit it again, whatever. Bit unusual for any market to hit an all-time high and then the same day pull back 25-30%. I think that's a bit weird. I'm not going to use the M word, I'm not going to use the manipulation word, but it's a bit weird. Here's ETH's 1-year MA multiplier. Buy zone, sell zone, not even close yet. It's approaching 4,000 now. I don't think ETH is done yet. Looks fine. ETH 1050, clean EMA crosses. Actually look great. This looks fine. ETH could go to 2K and still be at support here on the 50 EMA. So that looks fine. ETH, honestly, couldn't be happier. ETH's cloud looks fine. Still got a ways to go down as far as Kijun support. A bit weird that ETH was going up and BTC was going down this week. We rarely see that, by the way. We rarely see the stuff we saw over the past couple days with ETH relative to BTC. Now, ETH can outperform BTC. BTC can outperform ETH, certainly, but they don't typically move in the opposite direction. A bit weird. ETH's pitchfork, pick 3 points, get ready to change. This is where price wants to live, currently above that pitchfork. It's probably better to watch this diag at this point, honestly. Support currently at 2K. ETH did hit its R5 3 times, failed, hit the R4 immediately on the yearly pivots. 200 period moving average is around 1,500. But overall, looks fine. ETH looks fine. ETH BTC surging, bit unexpected as far as where it sits in the cloud. But if it's in the cloud, anything's possible. You're always expecting this edge-to-edge move. You can see it failed this one and failed this one. I guess it hit this one. But pitchfork tells me probably going to chill until several weeks from now when this has a shot on cloud to actually pull up into the other half of this pitchfork. But I think most people are watching this horizontal at this point, and they're seeing that ETH BTC is at multi-year highs and they're getting excited. That's fine. I think 01 is on the table, but it's got to get past this pitchfork median line first before we get too excited, or anybody gets too excited about ETH BTC. I'm seeing all the meth heads just absolutely euphoric, right? I'm selling all my BTC, it's gone. Whatever, fine. I'm happy for him. Good for you. So yeah, 01 looks reasonable. I don't know about anything past that based on the past couple years worth of trend. Lastly, I'll just say if you're trading ETH BTC, God bless you, because I don't think I could do it. But the 4-hour did have a pretty good signal. I don't really look at it on that low of a time frame typically. But since April, the 4-hour has been kind of dead on the money as far as trend for ETH BTC. And this is why you even trade this as a breakout and you get stopped out. But you trade every breakout equally, and you say, you know what, this is going to the moon. This is going to the moon. Right? And eventually it does. And those that outperform, those trades that outperform, make up for those trades that get stopped out. So that's all I have for this one. Like, dislike, comment, share, subscribe. Let me know what you think in the comments, and happy trading.